Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is September the 25th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Let's start with the E-mini S&P. Let's take a look at what's going on. Yesterday, the put wall was down here at 66.75. Today, the put wall is up here. So what are the traders thinking? Here's the interesting thing. They're thinking, like always, little dips are going to get bought. And it did. But we've collapsed at the value area low. Now notice the range of motion for the 30-minute high volume candlestick, right? It's way up here. That's the opening range candle of the day. Hello. Okay, there we go. So this is the opening range candle of the day yesterday, and we can see that we left that opening range by about, what time is that? 11:30 Eastern time. So this is what our volume profile people would call a failed downside auction, right? Meaning they tried to auction off things and people said, I don't want to buy that. And so now it slips us into the zone below. So let's see how much of a downward retracement we got off of that 30-minute. What do you know? The one-to-one motion puts the put wall up here at 6,680 or so. Our Fibonacci does a better job of showing where that support edge is, and that is 6,682. That being said, because the put wall is sitting here at 6,684, you are going to see traders try to recover here. Now, take a look at momentum. It's steeply negative for pre-market action. Take a look at prior pre-market action, how shallow momentum normally sits. And here, not that shallow. They are trying to hold it up here. But as we get closer to the open, you see that fade in momentum. So we've got accelerated momentum. Now, here's the thing. Here's how you think about, well, do I put a limit order at X? The first thing you have to think about is, what is relative trend? All right, now for those of us that use tight moving averages, we're going to see that's downward. Okay, if you just use your eyeballs, you're also going to see high, low, lower high, lower low, lower high, lower low. That's Charles Dow definition of trend. When you come into a support zone that you see, that you know that's been measured, that used to be a put wall, your examination should be, remember, use the OODA loop. You have to orient yourself first after your observation. Hey, it's headed lower. It's right at support. Then that orientation comes next. What's the orientation at support? Downward trend, downward momentum. The probability that it breaks trend, the probability that it continues trend and breaks your price is what's very likely to happen. So you know when trend is down, momentum is steep, your goal is not to go out and put a limit order at a specific area where you think the market is going to turn around. Your goal is to watch price action exhaust. We just finished a 30-minute candlestick. Looks like a 7 a.m. candlestick. We have GDP ahead. Well, we just finished that, and it's got more than average volume on it. My thought is there's going to be a liquidity sweep and then another wick that comes into the space like this, because this put wall here tells me that the traders think we are going to be in a dip buying zone, right? 30-minute chart has certainly changed. If we move several days prior, we'll see dip, buy, and then it breaks. And it breaks at the call wall, which has been easing down over the last couple of days. It sits up fairly steady where it is right now over the last 2 days. The put wall moved up. And so people are going to be caught on the back foot. So what are they going to do? Well, what they're going to do is sell the futures or sell the equity, right? So that they can flatten out their delta, right? If you sell a put, you have positive delta. So you must sell the instrument in order to flatten your delta event. And so we are seeing it move down. GDP is on the way. I would get out of the way here unless you've got some whiz-bang strategy that you know how it looks, and then you work through that, right? That's how you work through that. All right, so what do we look at below? Yesterday on Top Step TV, John Hoagland said, hey, 6650 is going to be the next line in the sand for what he was looking at in terms of this inverse head and shoulders pattern. Now, I'm not disinclined. As a matter of fact, I'm very inclined to see that as a rotation downward. And the beautiful thing about technical analysis is that you can use several things to get to the same conclusion. And if you have a lot of things moving to the same conclusion, you'll see that technical analysis move out. Now, doesn't mean you need to take 52,000 different conclusions to get yourself to that space. Just stick with one, and if you hear somebody else converge on that line and why, then you go, okay, that's a little bit more evidence in our favor. Now, here's the next gamma line of interest, 6650. GEX1 means that here is the biggest line in the sand. GEX1 is the second biggest line in the sand, and that's at 6650. Remember, they're still going to try and fight around this 6675, and what these guys who normally sell the index down, when they're doing that, and here's just me being a language Nazi, the singular is index, the plural is indices, okay? Singular index, plural indices. Anytime somebody says indice, just imagine me scraping my fingernails against a chalkboard, because that's how it sounds to me. All right, that's all. I'm done. I'm off my soapbox. Okay, there we have what we're looking for. Downward flow, 6656, 6650, and then we have to go to our 4-hour chart. That brings us to 6630. This is the last real space that we had accumulation, right? Price accumulation. Notice this wick, heavy short-term statistical flow downward. So that means intraday, that's short. Bigger picture says, hey, we got a moving average that still pushes us up. And that's what we're looking at right now on this 4-hour. So this test yesterday of 6696 that sort of bounced and then collapsed, we still should see a little bit of noise. We're coming into the last clean zone of inventory accumulation off of that prior zone of inventory accumulation. And so my suspicion is that this 6650 holds the line, and then we watch for the Fight Club to come in and see what they can do about pushing us back up into the range. Remember, sell Rosh Hashanah, buy Yom Kippur. Yom Kippur ends on October the 1st. We have this fade into flow. Could they buy it prematurely? Absolutely. But those of us that have had short calls that are staring down price action and saying, oh my gosh, I got to roll this contract, primary information that tells you sit tight and let them shake the trees into those lower levels where you can just cut and run. All right, there we go. Let's take a look at the NQ. Same sort of thing, except these guys are at their put walls. Very interesting. They are at their put walls. Put support on the week/month is getting tested. And it's right near that 0 DTE. So what are the traders going to do? They're going to try and bounce it here. It's also that 63 simple moving average. They're going to try and bounce it here, but if they cannot quickly, they're going to sell into the flow and bring it down into a pretty heavy congestion zone, right? Fed chatter right here. Open of the Fed chatter, close the Fed. No, I'm going to leave this right here. 24,524 is a flow line that is sitting right in the midst of 3 closing VWAPs. I'm going to move that down to 24,500. You know, with the NQ, you sometimes have 20 points down and then move up. So battle zone here, 20 to 30 points before it decides what's going on. Value area low on the 4-hour chart is 24,571. And more importantly, 2 put support lines at 24,615 and 24,650. What that's going to do is cause this area to be fairly noisy. I would say sit back. Remember, the buffet is always open. You can step back and go, I am not going to engage in a high-risk event just because I think there's something on the back end for me. Don't do it. Wait until your setup comes, the trade you like that fits best in your strategy, and then run it to the upside, all right? Or downside, whichever way you want. 24,700 is where the call wall is sitting. It's also the breakdown of the formation, but notice what else. This base, which is another reason I think the traders are going to try and bounce on this zone, this base is the low of that 4-hour candle. So they are going to try and lift it here, 24,624. Upward pressure event, that call wall, 24,700 or so. And then the congested zones right here, where we could literally go from the bottom to the top if these shorts are finished with their mean reversion. Could they be finished? Absolutely. Absolutely. This market has spent very little time underneath this 63 simple moving average. Very little time. And so if we stare it down and we go, maybe this is some kind of mean reversion. If you go mean reversion, bounce. Mean reversion, bounce. Mean reversion, bounce. Tops are made in cycles. They don't go straight down. They are cyclical because people are always, they're going to do what they're used to doing, which is buy the dip. They're going to get flummoxed and they're going to continue to buy the dip. And then if the market fades, which it should eventually, we need a little bit of a pullback. They're going to be caught flat-footed again, and we're going to have more rotation down. All right? Always takes two sides to make a market. We know what we're seeing. Look at all of this. It's gone. So what am I going to do? I'm going to remove all the annotations. Take a look. How close the call wall and put wall are together. They really expected price action not to fade and to hold between this ledge of 24,700 and 24,625. Now we know from the big picture, this is why they are fighting around here with these put walls, right? We know that this is an area they're going to bounce. The only place we could have seen that was on the 4-hour chart. So remember, we observe the landscape and then we orient the price action before we decide how we're going to act. It's the OODA loop over and over and over again. So today's VIP will be doing the same sort of mechanical flows, looking at where the volume pockets are sitting, watching how to measure them, and staring down that backdrop that allows us to orient and then execute, not just simply execute because we see a price level. Okay? Let's go to gold. Well, I find this to be very interesting. We drew these levels yesterday. Put support showing at 3,750. So everybody's fine there. The call resistance area is 3,800. Price action bounce, look where the bounce is. High volume candle, what is that? 230. That's very interesting. We have a 230 formation that comes into that zone right there. And then the high volume candlestick is this line right here from several days past. And that line is this region right here. And so that region is 3,756. I had the measured move at 3,746. Missed it by about 4 points, but we've got ourselves rotation. Look at what the traders are doing. Check out the volume profile. They are gathering inventory. Here, liquidation break stops out the weak longs. Okay? It also tells the person who's going shorts, hey, this is great, but then it also shakes those weak shorts out because they have to cover once they get inside of the inventory event. Okay? Old resistance being battled as new support, that's 3,777. And then our floor of support is going to be where that liquidation break looks like it stopped, which is 3,765. It's sitting between the call and put lines, and so it could chop around here just a wee bit. I expect this GDP number to give it a little bit of a goosing, as it were. Let's take a look at this. Durable goods, GDP, international trade, jobless claims, existing home sales. Boom, boom, boom. Right? Now, are these numbers really that important? No. Active traders, because they're always revised and whatever. I'm not saying they're not important extrinsically, but for us, they're just trading vehicles. They're just trading reasons to trade in this mechanic. And then Friday, we have personal income and outlays and consumer sentiment. Next week, we're going to have the employment report. That's going to be the big number to watch, but just like all the others, they get reviewed constantly. And, you know, it is what it is. So here's the box. The break over 3,790 is very likely to send us into the call wall. This is a very messy patch, right? Accumulation, distribution into another accumulation, distribution. V bottom. There's no space where they're arguing. That's just boom, buying it, and then accumulation, minor distribution, accumulation, distribution, accumulation. So watch it. What's the trend? It's mixed. We're caught between two moving averages. What's the VWAP? It's flat. What's momentum? Slightly up. So if you're looking at flat moving averages, remember, moving averages are always master and commander. If you're looking at flat moving averages, positive momentum, they are looking for the floor of support to buy, and they are looking for the ceiling of resistance to sell. And they're going to play that game until somebody comes in with more volume than they are willing to sell. And it's going to push it up. Okay? So that's what we're staring down. That big picture, turn it into a storyboard for yourself. And oh, wait, let's see what the 4 hour looks like here. Okay, so we had, yeah, that is just a mess. We have high, low, lower high, lower low. If we rehold this prior low, which we're trying to do right now at 6,783, we're going to head back to, did I say 6,700? I meant 3,783. We get back to 3,800 and then 3,810. Yeah, that's my thought. All right, let's go to SPY. Whoa, that's a big bounce. Right? We moved all the way to 658. Take a look at where 658 lies. right here in this congestion pocket. What is that line? VWAP. Okay. So they're trying to hold this framework, momentum, slightly negative, lower highs, lower lows. We've got a bunch of news coming. That's going to give us a wick because they're all piling in, right? Will it give us a wick up, give us a wick down? I have no clue. But what I do know is that way down here at 654, we have a breakaway candlestick formation that's sitting very near put support. Right now, the 0 DTEs are in trouble because we are under the put support line. Look at how tight the 0 DT call wall and the 0 DT put wall are. That is very tight. I don't know that they love that, right? But here is the big call wall, 670. Here's the big put wall at 654. My suspicion is if we're in true mean reversion, is that we dip into this zone and then we start a brand new battleground that has a floor somewhere around 653. Okay. Yeah, that's it for SPY. Big wick. Holy smokes. I don't know if that's liquidation. I don't know what that is. But here is our opening candlestick formation way up here. And our closing candlestick formation down here at 661. We get up over 661.70, $661.70. We'll head back up to 63. Otherwise, we're going to have a nice slow leak, which is good for the market. If we get a slow grind down, it's going to be great for the market. 655 is the line in the sand. So we'll watch for that in anticipation. All right, listen, that's it for me yammering on, but stay frosty. Remember, don't use cognitive bias that says, oh, we're down this far, we always bounce, I'm going for a long. No. Examine the lines, look at the trend, look at the momentum, zoom into a tight a tight candlestick formation, and watch for traders to accumulate inventory. Once they start accumulating inventory, they will want to distribute. And the moment that distribution begins, you're off to the races. Okay? We'll study that just like we did on Monday. We're going to do it again. My firm belief is that our psychology is going to matter way less if we are clear on what the market is trying to do. That confidence event comes in and kicks us in the teeth when we are unclear on what the market is trying to do. And the way we figure that out is we observe, we orient before we decide to act. All right, I'll see you on the streams.